We're talking about a really big topic. We're talking about ERC. We're talking about employee retention credits, and we're going to break down everything you need to know. We're actually talking about other tax benefits as well. But I think our guest, Catherine, said it best, where this could, if done correctly, be like a whole other round of PPP for your business. I love PPP. I don't know about you, but if you did or you wanted some of that, didn't get it or didn't get enough, well, this could be the path to be able to do it. So we're going to break this down for you today. We're also going to be diving into tax benefits as well. So with us to have this discussion is Catherine Tindall. Now, she is a CPA specializing in advanced tax reduction who proactively works with clients to reduce what they pay in tax while supporting their greater wealth building and life goals. Now, her goal for every client is to provide return on investment in the first year, usually $15,000 to $100,000 in tax savings. With a focus on automation, Catherine and her team set themselves apart by utilizing technology whenever possible to streamline their advisory services and to offer those services to anyone, no matter where they are located. She's especially passionate about providing tools to support entrepreneurs and small business owners in navigating the changing tax landscape, as well as helping them reduce their overall tax burden through proactive strategies and advisory. Catherine, thanks for joining us today.
Yeah, thank you for having me. I'm so glad to be here. It's a great topic.
Yeah, I did. It is a great topic, and we were going to start by talking about benefits. You mentioned ERC. I was like, oh gosh, let's do that because like we've never covered ERC yet, and we should. Mm-hmm. So let's start with the beginning. What is ERC? Like, what's the actual full name for it? How's the program work? Give us some background here.
Sure. So the ERC stands for Employee Retention Tax Credit. If you're a business owner or even just a person walking on the street, you've probably been advertised to about this program. It's kind of one of those hidden gems of the tax code because while PPP was going on, it was unrolled as a program at the same time during COVID. So it's for tax years 20 and 21. But a lot of people just didn't take advantage of it because it's a much more complex program than the PPP. And it took a while for us practitioners to get enough guidance to be able to execute them. And the media just never picked it up the same way they did as PPP. So it's a payroll tax credit right now because we're in year 2022. It comes back as refund checks. And it's up to $26,000 per employee. Though, just as a caveat, most businesses that I work with, they don't qualify for nearly that much, but that is the upper cap of what you can qualify for. So you can imagine, even if you've got a team of 10 people, 5 people, and you hit enough of the qualifying factors and qualify for a lot of it, that could end up being a 6-figure tax credit for you. And that comes, I say credit, it's a little confusing because it's not like it credits future tax amounts. It's actually a refund for money that you've previously paid. And so, you would get that back in the form of checks in the mail from the IRS that you can then use as you please, because it's really just a refund of money you've paid. But it's really for businesses that were affected during the pandemic. We can talk about kind of some eligibility guidelines and things like that, and maybe some red flags to see if you're eligible. But it's mostly geared towards employers. It's a per employee type credit. So the more employees you have, the more likely it's going to be a beneficial program for you.
So what's the purpose of this? Well, why was this program rolled out to begin with?
Yeah, so I think the mindset behind it for Congress was during the pandemic, so many businesses were adversely affected. And instead of, they wanted to reward people who were being really impacted by the pandemic for not putting their employees on unemployment. And so this credit is really just to compensate employers for the hardships they experienced in the form of, subsidizing some of the wages that they were paying when they could have easily just shut the doors and stopped and put everybody on unemployment, but they didn't. And so I think that's the mindset behind it. And then also at the time when it was released, there was so much economic uncertainty, and Congress and the government were really concerned about, economic seize-ups from businesses not operating at normal capacities. And I think this program was just one of those. If we can push more money back into the system, it will keep the economy going. And so because it's a credit program, it doesn't have a fund cap. And so, it puts business owners who didn't do it on a fair playing field with the ones that did, because you could have done it during 2020 and 2021 when it was initially rolled out, but a lot of businesses didn't just because it was too hard to administer. So you're able to go back and still get that money. Unlike with PPP, where it's a completely closed program, there's no more opportunity there. This one, because it was written as a tax credit, you can still go after it, which is, great.
So is it only for the years of us having employees in 2020 and 2021?
Yeah, so it's a calculation that's done for each quarter. And so what you do is we take a look at, does a business qualify under, there's two main pathways. The first is that you had certain revenue declines. And this is something where I just tell people, if you've got more than 5 employees and your tax professional hasn't done an analysis on your quarterly financial statements, you just want to have somebody look at it, right? So if you had certain quarterly declines, I usually tell people if you had anything more than a 15 to 15% decline in any quarter, you're just going to want to have a professional look at it, because that's one way you can be eligible. And then the second pathway is that if you had government interference in your operations, and we can talk about that more, but so basically those two pathways would trigger eligibility on a quarter basis. And then for the quarters that you're eligible for, you basically get a certain percentage of the wages and health benefits that you paid your employees during the pandemic. So that's kind of the broad brush of how it's calculated.
Let's talk about eligibility, because you mentioned that a few times in what you just said. So what we're looking at is we retained employees, we kept employees hired through 2020, 2021. Now there's a chance for us to get part of that money back as a refund. Now, if we did, how do we see if we're eligible for this? Are all businesses eligible, or do we have to meet a certain requirement to be able to be eligible?
Yeah, so not all businesses are eligible. Like I said, there's two main pathways. I think one other thing I should mention too that some people get confused by, it's kind of a misnomer that it says the retention credit. If you had fewer employees during the pandemic, that's fine. There's no issue with that. The only punishment you get is because you had fewer people on payroll. That's a smaller payroll number to get a credit on. So that's kind of how that works. So even if you had fewer employees, or if you took PPP, you can still do this program separately. The main two pathways for eligibility, the first one, like I said, is the revenues. So when you look at your quarterly financial statements, calendar year in 2019 compared to the same quarters in 20, and then for existing businesses, it's the first 3 quarters of 21 qualify for the credit. If you see in any of those quarters, say Q2 of 2020 was only 60% of that same quarter in 2019, then, okay, we've got more than a 50% decline there. That would trigger eligibility for that whole quarter. And then we'd look at all the wages, and then you get a percentage of the wages, up to certain amounts, and then, allocating for PPP. So it's a little complex, but so you want to look at those quarterly gross revenues. And if you had disruptions, so for a lot of people, they might have done better year over year during the pandemic, but the timing was all messed up. So very often, like with construction companies that I do these for, they could have had a better year, but because of the supply chain disruptions, and then because permitting offices were all backed up, all their receivables got pushed into later in the year. So things like that can trigger eligibility too. So I'd say look at your quarterly financials, and if you've got uneven revenues, it's worth having a professional look at it. And then the second pathway is around, government interference. This sounds really vague when I describe it. The rules that we actually have from the IRS on this are very particular. We try to we take a qualitative situation and reduce it to a quantitative situation to actually prove that you meet the government restriction requirements. But just to talk about it a little bit, if you had in your company, if you had disruptions due to government mandate orders that caused you to have to change your operations in a somewhat significant way, it's worth just talking to a tax professional about it and see if that disruption constitutes, enough of the requirements to qualify for it. And to just give some examples, a restaurant operation subject to indoor dining capacity restrictions due to a state government order, that would be a qualifying disruption. A construction company that was forced to do social distancing requirements that required them to run crews at much smaller numbers than they normally do due to a state government order, that would be a qualifying, government disruption. And so you want to kind of think in those terms of what were the state orders that my company was subject to, and did those state orders force us to modify our operations in a, somewhat significant way? That's what a tax professional would have that conversation with you, and then go dig and actually, prove it that that's going to work. But those are the two general pathways.
Makes sense. So we either see a decline of 50% year over year from any quarter in a year, and then 2020 and half of 2021, I think you said.
Yeah, so it's different rates for the different years. That's why I usually just tell people, hey, if your revenues were inconsistent and you've
Yeah.
got 5
Okay.
employees, you should be having this conversation with somebody who knows what really knows the program, because there's weird rules too with we're able to do like alternative quarter elections, and it just gets really complex. So I just tell people, hey, if you weren't going up every single quarter from 2019 through to 2021 and you've got a decent head count of people, just have a professional look at it, because you don't want to miss it. That's the main problem with this program is, if you think you're not eligible when you really are, just because you haven't had somebody do a full assessment for you. That's the main pitfall that I see most business owners make is, oh, I looked at my financials. It kind of went down a little bit, or I don't know. I didn't look at it. You don't want to just eyeball it, because at, a couple grand per employee per quarter, that's, a pretty significant thing to not do a due diligence on. So that's usually the main warning that I have for people.
I'm curious, what's some of the highest refunds that you've seen out of this program?
Oh, it's so idiosyncratic to companies. We work on claims as small as 30,000 to 3 million. It just really depends on how many employees the company has, and then just how affected they were. I have some companies where they only qualify for 2 weeks. I have other companies that qualify for all 7 quarters. It just really depends on what was going on in the company. And it also just depends on things like, did you get both rounds of PPP? How did you use the PPP money? Did you get other, payroll related grants? Things like that can really swing it too. But, I usually do the rule of thumb, like if you've got more than 5 employees and you haven't had the conversation with your tax professional where they have access to your quarterly financial statements, and then that conversation about the government disruption, you just haven't been assessed for it, because those are the 2 main pathways of it. And you'll want to make sure that you've been assessed for it.
Can everyone help with the ERC? Because it sounds like you're saying talk to your tax professional. Does that mean that every accountant that's out there works with ERC, or do we have to go hunt somebody down specifically to help us with this?
Well, many don't. So, in my professional opinion, I think you should be working with a tax professional on this. I've seen work that payroll providers have done, and, even large payroll providers, I've seen bad work be done. So I definitely recommend working with a tax professional. So like a CPA, an enrolled agent, or, a tax attorney who has a background in tax law. Obviously my company, we do these for other CPA firms that don't want to do them. Because it's a complex program, and we do these for, individuals, and then work with their existing tax professional to make sure everything, works together. So that's something that my firm does, but I would definitely recommend, unlike PPP, where it was a very simple application, a simple calculation, you sign here, all done. This program, because it's a tax credit, and this is part of the reason why a lot of people haven't done it and it just didn't get the play, is because it's a tax credit. It interacts with so many things, and you're really relying on the ability of that practitioner to get the calculation done correctly, to have your substantiating documentation correct, because, big warning on this program too, there's going to be a lot of IRS enforcement with this, because I see a lot of fraud in this space. And so, making sure that you've got good paperwork so that in a year or 2 years from now, if the IRS comes back, you're not going to have any issues in audit. So all those kinds of things. That's why you just want to work with somebody that does a lot of these, and has that strong tax background, because it is, any tax credit is really, they get really complex really quickly, sadly.
Catherine, and we'll discuss at the end too, but where can everybody go to get in touch with your firm? Because I know you do these. I just want to drop that now, so
Sure.
We're talking about it, everybody knows.
Yeah. So if you're interested in having an assessment done, it's something that my firm does as a complimentary thing, just to see if you qualify for it. You can visit our website, and there's a button at the top that just says, see if I qualify. You just click that, answer a couple questions, and then we can get in touch and do a phone call and just see if this is a program that looks like it's going to work for you. Full caveat, we tend to work with cases that have at least 10 employees. So as long as you have more than that number, we're happy to just take a look at your situation and see, if this could work for you, and get you some figures before you have to make a decision about actually proceeding with the program. So that's something that we do.
Sure. And if they have less than 10 employees, doesn't mean they can't get it. It just means that, like, you're working with, companies that do. So where can they go? What's your website again?
It's dominiones.com.
Dominion ES income. And we'll go over that as well, but I wanted to drop that because they're the people like, well, how do I get this? Now you've given us a path in the middle of the road here. So that being said, we're hunted right now by people trying to offer this. I know I am. Like, I mean, it's like, right. It's like every week somebody asking me about it. And then everybody's like, well, I know you tried, but we could do better. And then it's not for us because we didn't really see decline. We did pretty well through COVID. And we've had several people look at it enough to know that. But here's the question. Why are they hunting us? Is this a really lucrative program? Are we being charged really high fees by the companies that are doing this? Well, I guess what I'm asking for on the predatory side is what should we look out for? Because you're talking about accountants and payroll providers. I got people out there, delivering groceries that are offering me this. I mean, it might be an exaggeration, but you see what I'm saying? Like, there's people that are not even in the space that are getting into this industry. So what do we look for to not be taken advantage of with exorbitant fees from companies offering this for us?
Yeah, I would say the first piece you want to watch out for is, you want to work with a licensed tax firm or, professionals people. So if you're getting approached by marketing companies, if you're getting approached by, basically salespeople, that's suspicious to me as a tax professional, because even when we talk to clients, they're always, the first phone call is with a tax professional, not with a salesperson, because it comes down to, what's your actual situation? What are the rules in play? How is this going to work for you? And then also explaining the complexities, because this program interacts with your income tax returns. It interacts with a lot of other programs. And so if you don't have an experienced person talking to you, it's really easy to make mistakes. I think the reason why so many people have gotten into the space is because you've had this weird gap where a lot of tax professionals are tax professionals saw the program, saw some of the initial rules, and were like, you know what, we're not going to touch this. This is too complex. This is out of my wheelhouse. I'm not doing this. And so a lot of tax pros decided that they don't want to do it, which, that's a lot of our work comes from tax professionals that don't want to handle it. And then, so you've got this big gap of underserved business owners. And then just a lot of these companies, I think, who don't come from a strong tax background, see a program like this and they're like, oh, so I just take wages and times it by 70%. And there you go. There's my credit. It's just really not as simple as that. And so I think there's just this like kind of ignorance that happened where you've got these people in the space trying to do this work, but they don't understand things like, when a company is going to qualify under, say, a government interference, we have extremely specific rules and examples of what's going to qualify and what's not. And so and a lot of these companies, what they'll do is they'll just ask the client, say it's like probably an operation like yours, right? Like professional services. And they say, did you guys experience disruptions during the pandemic? And of course you did, right? Everybody did. And so you say, yes, we did. And it was, through the whole pandemic. And they say, oh, okay, great. You meet the government restriction rules. You're going to qualify for the whole pandemic. And it's just that's not going to hold up for IRS audit. It's like we have such specific rules around it. So I think that's why there's a lot of bad work being done. People just trying to slap these together, be mills for them. And it's, there's going to be a lot of fallout. The IRS just onboarded 300 agents for auditing this program, and they're definitely going to use every single one of them.
Sure.
I'm already starting to have people come to us who've had bad claim work done. And it's, some of the stuff that I see, it's, it would make you cry. I've got one case right now where it's overstated by $1 million. It just really, really shoddy stuff. So that's why it's important, if you're not sure, definitely work with somebody who's a licensed tax professional. Don't be swayed by beautiful marketing websites. You want to work with people that come from the tax profession, existed before the pandemic, and then have your CPA in the loop, because they'll be able to kind of take the temperature of the situation too. If what the company's saying sounds too good to be true. Because, if you have a company approaching you like, hey, you guys qualify for 100,000 or you're going to get 26,000 per employee. It's like, most people, when they talk to me, like I can't even give them figures until I've looked extensively through all their paperwork. So it's I think that's where you get that why the
Sure.
situation is what it
It's
is.
pretty serious too, because as we saw with PPP, there was, rampant fraud, billions of worth.
Yes.
And now
Yes.
it's not like it's not going to happen. Now they're figuring out where it was and who it was and going after those people.
Yep.
And like you said, the last thing you want to have is somebody say, hey, you got $1 million, you put it in your bank, you spend it. And then the IRS comes back and says, yeah, we'll take our $1 million back.
We're going to take it
plus all
back.
these penalties.
Yep.
I mean, that'll put anybody out of business and completely ruin your life with the IRS.
Exactly.
So that makes a lot of sense.
Yeah.
A lot of people that I see are coming from the PPP space. They're people that got in the space to offer PPP. They rode that wave and they loved it. Because remember, I'm in the lending side of things. So a lot of these guys that got in the lending side and jumped in on PPP, what they're doing now that PPP's done is now they're jumping to ERC, and they are nowhere associated with what you're describing. They are flat out in the lending space. But I see them in all different kind of spaces.
Oh,
That's
yeah.
commonly what I'm saying.
Yeah. Yeah. And the thing that's tough with it is, unlike, like I said, unlike with PPP, where it was a simple application, right? You just show a payroll number, it's a multiplier. You just attest that you're going to use the funds for payroll. You sign. That's it, right? Like and then as long as the company is using the money for the payroll, you're good. Like that's really the only level of scrutiny going on there. With this program, you're subject to, like, first of all, you have to make sure you're not double dipping in wages that you're not allowed to. So you have to do allocations to get rid of PPP. You have to make sure that you're not including business owners if they have a certain ownership percent, or family members if they have a collective ownership percent of a certain amount. You have to make sure you're doing the eligibility calculations correctly. So the revenues piece is easy, right? Because that's just a P&L. But really for those government orders, which is what a lot of these companies just, allow, the client says, oh yeah, I was subject to a government order. And then they say, okay, great, you qualify. That's just not going to cut the mustard as far as like our document retention requirements and just showing, the proof that they really do qualify. And so, it's still going to require a tax professional to do it. And I think a lot of these companies have tried to cut corners. Not all of them, but a lot of the ones I've interacted with, they try to cut corners, and they're having somebody with no tax experience try to process these, who doesn't understand, this is a software company. Do they get an R&D credit? Because R&D tax credits interact with these and we have to remove it. Like they just miss a lot of those nuances that will really screw the credit up. So it's very serious. And I think people don't realize, when you as a taxpayer engage in a situation like that, when the IRS comes back, yeah, they're going to penalize that provider, but ultimately you're the one that got the money, and it's your name on the tax return that got, said that you were eligible for this. And so ultimately you're going to be left holding the bag on it. A lot of people don't realize that. They think, oh, well, if the provider screwed up, then the IRS is going to go after them. No. They're going to come after you.
Sure.
So you really have to, the key thing as a business owner approaching this program really is the due diligence of the provider. That's the main job that you have. And as long as you've picked somebody good, and who's credentialed and just, knows what they're doing, you're not going to have a problem. It's just, if you kind of like click on an ad that you got, or, oh, my buddy told me to use these guys, so I'm just going to do it, it's probably fine. You have to put in, that's where you need to spend your time as a business owner, is doing some due diligence.
When we get this up to 26,000 per employee, where does this even come from? It sounds like such a weird number. And how do they figure out how much per employee? Is there a simple way of just giving an overview without a detailed analysis of how they figure out how much you get?
Yeah, so that's the total cap of the credit. So when they say 26, that's the total cap. So you can qualify for up to $5,000 per employee for tax year 20. And you can also qualify for up to $7,000 per employee per quarter for the first 3 quarters of 21. So if you have an employee where, you meet the eligibility requirements for all the quarters, and then you're paying all your employees enough, and, say you didn't do PPP, so there's no exclusions there, that's where that 26 would come in. If you get that hole in one situation. Just from practical experience, most businesses that I work with do not qualify for that. For their employees, because they either don't pay people enough, or they don't qualify for all the quarters. So that's, it's kind of misleading, because that's the upper cap. That's the max of what it could be. But what it actually works out to being for most companies, it's very idiosyncratic to what their situation was and how they pay people and how they got PPP, that sort of thing.
Sure. Do we have any idea on when our ability to apply to get this may expire?
Yeah, so it's going to start to phase out, not this April, but April 2024. I usually tell people, if you think that this is an opportunity for your company and you haven't pursued it, you'll want to do it as soon as you can, because a lot of the time, what can be a problem here is not so much the IRS statute of limitations, but if your payroll provider isn't maintaining, or if you switch to payroll provider and you can't get all the documents to actually do the calculations themselves, that's probably what's going to be more of a limiting situation. Because to do these right, we need really unusual payroll reports, and not all payroll companies are going to maintain those for a really long time. So it's worth, looking into as soon as you can. And especially for most businesses, where it could potentially be like 6 figures back. Do you really want to sit on that for another 6 months? It's better to just take the 1 to 2 hours and get the documents over and just get it done.
How fast can you get the money? Let's say it come to you. What's the process like from having everything evaluated to potentially getting the money back?
Sure. So on our, and I can't speak to other providers' processing times, but for us, once we have it usually takes a business owner or their CFO or their, bookkeeper, whoever it is that's providing us documents, usually takes them about a couple hours to get us everything, 2 hours tops if they're, fairly disorganized. And then for us, it takes us about 2 weeks to go from that information to having the credit calculated and then having the, audit package done, et cetera. And then we then do it's a paper filing with the IRS, which is why these take so long. It's not an electronic filing. And so then it takes usually a minimum of 3 months for them to come back, but it honestly depends on the size of the claim. It depends if they've got anything else unusual going on. And then also it's just hard to say because, right now they're not doing a lot of enforcement on the front end of these claims before just paying them out. With this new onboarding of agents, I don't know if they're going to start to do some more real-time enforcement. I would hope that they would, just because it's better for them to catch it and not pay out a taxpayer than to pay the taxpayer. Taxpayer thinks they're okay, and then they come back in 2 years for the money. So I think, that could change at any time. But right now I'm seeing processing times of about 3 to 4 months for the smaller tier claims. So that's where it's under 100,000 a quarter. So that's most claims, most businesses.
So yeah, somewhere between 4 months, 5 months, 6 months is what somebody can expect.
Yeah. And it's just hard because you're dealing with the IRS and things can change at any time. They can reallocate personnel, but they've been consistently getting better the past couple of months of processing times. So, I don't think it's unrealistic. 3 to 4 months. I don't think that's going to change a lot, but you're not guaranteed the same way, you might be, with the PPP where they had to have the turnaround times, statutorily, you're subject to just kind of the IRS's whimsy on it.
What about paperwork? What kind of paperwork would we need to have to be able to apply?
So, the paperwork that we need for calculations, it's profit and loss statements from 2019 through Q3 of 2021 if you're an existing business. The rules are a little different if you started up during the pandemic, but I'll just speak as if, you were existing the whole time. So profit and loss statements, we'd need copies of PPP forgiveness applications because we have to not double dip with wages that were taken, were used for PPP forgiveness with the ERC. So those can't overlap. Almost every company, just as a caveat, almost every company I work with has PPP. So it's not like if you took PPP, it's going to wipe out all your ERC and then it's not worth it. Most companies have both. So you would need those PPP forgiveness applications, and then just confirming things like if you participate in any other credit programs, paid any family leave, any severance payments. There's other nuances to it, but those are the main documents that we look at, along with the payroll tax returns, because it's filed on amended payroll tax returns. So we need those, and then just other substantiating payroll documentation, which is just things like paycheck ledgers, things like that. But usually we just work directly with a company's payroll provider and then they give us everything. So usually the business doesn't even have to, dig that stuff up for us. We get that directly from the payroll provider.
Anything else, Catherine, we haven't covered that everybody should know to be able to potentially qualify and be able to see what they can get with ERC?
Yeah, I'd say if you're interested, if this is your first time really learning any technical information about the program, I'd encourage you to visit our website and go on the resources page. We've got a PDF that we put together that's the top 5 ERC mistakes that we see companies make. And it goes into the details of like the most common issues I encounter with, business owners approaching this program. And so I would say, you know, the number one thing that I want most business owners to take away probably from from this long ramble that I've had about it is just, if you're not sure whether or not you qualify, or if you're not sure whether or not you've been assessed, you should talk to talk to a couple providers about it. You know, like I said, you can visit our website and fill in some information. We're happy to take a look at your case, but because it's potentially such a high value and high dollar volume credit, you know, for you to just kind of drop it, you're not doing yourself any favors. You know, take the time to, you don't have to understand the program. It's just talk to some providers about it. Make sure that you've really been assessed for it. Very often I have people think that their CPA has already looked at it for them and then hasn't done anything with it, or, you know, they think their payroll provider is going to do it. And, you know, the payroll provider is only, you know, charging them a nominal fee and then just kind of running it through the mill because it's, you know, they're just trying to keep your regular payroll business. So you really do want to make sure you're taking some time to make sure you've actually had this thing assessed.
Makes sense. Catherine, thanks for coming on with us today.
Yeah, thanks for having me. This is wonderful. I hope your listeners got some value out of this.
Yes, absolutely. So listen, if you're listening and watching, this really is nothing to see if, no cost to see if you can qualify, see if this is applicable to you or not. And from personal experience, I have a lot of friends that have got a lot of money from the ERC program. I mean, some hundreds of thousands and some in the 7-figure range. It could be substantial depending on how many employees you have, depending on, you know, how adversely you were affected by the pandemic. But again, it's 100% free to figure it out. So the best step is go to dominiones.com, and there you can click a button right there in the middle or on the top right of their page to see if you qualify. It's pretty simple. Then you can get in touch with Catherine's team, or Catherine's team will get in touch with you, and they'll go through and just do an assessment to see if it's worth your time or not. And they can handle everything for you to be able to get this. I mean, literally before the middle of next year, you could be looking at a substantial amount of money just because of how you actually had to navigate the pandemic. So if you liked PPP, if you didn't get in on PPP, if you did get in PPP and you saw the benefit, look, this is the last opportunity that I think we may see to be able to actually get some kind of reimbursement for how you were affected by COVID-19, by the pandemic. So make sure you check it out. And by the way, they don't just do ERC, right? Catherine's team works and does accounting all over the country. And this is a good sign of having a really good accounting firm. When they're able to come in and do something like this, that other accountants are referring business to them. Imagine if they're the ones handling all of your stuff and they're the ones that other accounting companies are going to as well. It's something to think about. Oftentimes people have a hard time finding the best accounting services, especially in their area. So check that out as well. They've got a podcast, they've got a blog, they're in the news. I mean, there's a lot of stuff you're able to access right from their website, dominiones.com. So make sure you check it out. It's Dominion, DOMINION, or IONES.com. So let me say that again. It's Dominion, DOMINION, then ES.com. So make sure you check it out, DominionES.com, and see what you can get regarding an ERC refund. Thank you.